everybody, welcome to the Bitwave webinar on NFT games and NFTs. I'm so excited for this today. We're getting going right now, but I will leave. We're gonna let people kind of hang out for a little bit. So we'll give everyone 1 or 2 minutes to join up, and then we'll get going here. While we're doing that, we have a poll. We always like having a nice poll. So we have a poll for everyone here. So allow me to share it, and then we will get into it. So, but yeah, like I said, we're gonna give everyone a couple minutes to get on, and then we will dive in over here. The poll for people while you are joining, it should pop up, is do you own an NFT? We asked this, like, we've been asking this more and more, especially since like 2021 and like the huge NFT craze. We've been asking this at all of our webinars, and I swear to God, we're going to release some sort of like data analysis. We're going to tell some sort of data story about NFT ownership per the lenses of people who care about enterprise and digital asset finance. Maybe like at the beginning of next year, we'll do a little wrap of what all these polls amounted to. So I sure hope someone on our side is writing them all down. So we'll give everyone 1 more minute to join, and then we will get into this. Again, the talk today is on NFT and blockchain accounting for games. So this is very much focused on, the NFTs. 2021 was all about NFTs, but gaming is a major component of that. We have GDC is the big game developer conference coming up around the corner here. We're going to be there with a booth. So we wanted to kind of do a little preview of what is going on with gaming. I mean, why is blockchain gaming a thing? Why do people care about it? Why do some people hate it? I don't know. We'll talk about that a little bit. But it's super exciting. So give everyone 1 more minute to join, and we'll be right back here. All right, and while everyone's going, we have just a little pull up on screen here that you can select. I think we're done now, so we're gonna get rolling here. So, all right, 67% said no, 33% exactly split by in 1/3, 2/3. So 1/3 said yes, 2/3 said no. Super interesting. All right, awesome. Well, welcome everybody. My name is Pat White. And I'm the CEO of Bitwave. Today we are talking about intro to NFT and blockchain accounting for games. That is what we will be going over today. It should be really, really fun. A big part, so that today is structured into 2 parts. With a lot of digital assets, we don't go into the why, because a lot of people who are watching this, like, they kind of understand the why, whether it be faster transactions or easier payment, or DeFi, cutting out the middleman. A lot of people understand the why. With gaming, I'm not sure it's always quite as obvious why digital assets are a thing, or why people are really getting excited about blockchain gaming. So that's one of the things we're gonna go over first is basically, why is blockchain gaming a thing? Why is it kind of shaking up the industry? Why are all the big players getting into this? And then we'll spend the second half talking about how you do accounting for it. What are some of the really unique challenges that come up with digital asset accounting here? So my name is Pat White. I'm the CEO and founder of Bitwave, co-founder of Bitwave. We are a comprehensive tax and accounting solution for digital assets. We call ourselves an enterprise digital asset finance platform. If you are in a position where you may have to bring digital assets onto your balance sheet, pay taxes on it, or anything, that is what Bitwave does. We are a comprehensive solution for everything that we're going to be talking about today, including revenue recognition, expense recognition, tax tracking, DeFi monitoring, all that kind of stuff. So you'll hear me talk about Bitwave, but we try to not have these be super Bitwave heavy kind of webinars. We try to talk a lot about the solution in general. So first, we're going to start out with, NFT is in the title. Everyone's been talking about it. What is an NFT and why does it matter? We're going to talk about GameFi, which is essentially, it's the term that has come to kind of be representative of of digital asset gaming in general. So you have traditional finance, TradFi, you have centralized finance, CFI, you have decentralized finance, Aave, Compound, CFI, and then you have now GameFi. So I don't know if that's going to be a forever name or not, but it doesn't really matter. So then we'll go through why we're doing this. We'll go into NFTs, how to do the accounting for it. And then we always like to talk a little bit about how to make your accountant's life easier. So we have a few slides on that. And then finally, we'll open up for Q&A. Hopefully we have time. Always got to say, this is not tax advice. This is some comments about what we see in the industry. If you need tax or accounting advice, you need to go and speak to a tax or accounting professional. If you go to the Bitwave website, there's a list of, on our partners page, we have a list of some spectacular people that know this stuff inside and out. They are a great group of people to talk to. This is really what we're seeing in the industry, but this is not tax advice. So you have to seek out your own tax and accounting advice. All right, so what is an NFT? There's been a lot of discussion about NFTs, and I think the probably prevailing way people talk about NFTs is pictures of monkeys, and that's fine. I mean, look at like the crypto is rife with people kind of, monetizing. I don't know, how do you say scam in a really nice way? I don't know, but like you're basically, you have people that are like both really, really good actors and you have bad actors. So a lot of what's happening around NFTs is kind of a very questionable, can you really own a JPEG? Does it matter? The power of NFTs as they really exist, and why we get so excited about them, is that an NFT is a token on the blockchain that is a unique identifiable token and has provable ownership. So like, take everything else away. Don't worry about Bored Apes. Don't worry about the JPEGs or anything, that kind of stuff. It is a mechanism by which you can prove ownership over some sort of asset in a public way, or in a kind of, not necessarily a public way, but in a way that you can prove it to multiple different platforms. That's provable. They can be tied to a wallet that you control. And that's why NFTs get talked, there's obviously JPEGs, but they get talked about for tickets, because provable ownership of a token for a ticket to a Dave Matthews concert is a thing. Provable ownership of a pass, what Gary Vaynerchuk just launched is a restaurant in New York where you have to own an NFT to be able to eat there. This is kind of like the idea of a country club for the NFT generation. And then even like Bored Apes, which I think is sort of the most famous NFT in some ways, and really is almost like maligned in owning a JPEG. One of the things that the provable ownership for Bored Apes includes is the ability to go to yacht parties during New York City's NFT week and all this kind of stuff. So, all of the stuff is like, it's provable ownership that says, me as the person who controls this wallet owns this token, and you can basically build any sort of logic around there. What we're gonna be talking about today is a lot of this around GameFi, and in particular, like the idea of NFTs as either in-game items, in-game land, or which is what like Decentraland does, or kind of like more generally identifying the users about it. So let's talk about GameFi in general. For people that are watching this that are kind of new to crypto, which I think we probably have a few people here, I always like to talk about crypto. The first thing I ever will say about crypto is that crypto and digital assets, it's all about incentives. Bitcoin fundamentally is a game theory experiment, right? This idea that you are converting electricity into an electronic digital currency is this idea that if you set up things correctly, i.e. the digital currency has value, and then the electricity you use has less value, so you can create an incentive to make profit by mining Bitcoin or Ethereum, whatever. Digital assets at their very, very core are all about incentive structures. And so as digital assets have matured, you saw this maturation from Bitcoin mining, which is essentially it is incentivizing people with computers to calculate math problems, but really it's incentivizing people with rewards to secure a global blockchain. Like if that doesn't make sense to you, don't worry about it too much. It's okay. But the idea is like it's all about incentives. So the rise of so Bitcoin led to Ethereum, Ethereum led to DeFi. DeFi, which is decentralized finance, is it's basically a subset of blockchain and crypto, which looks at like, hey, what if we set up a smart contract that allowed me to loan out money? Well, if you're going to do that, you have to have a way to create incentives, both to loan the money as well as negative incentives to actually punish people if they don't repay the money. And so again, DeFi was all about incentive. It was all about how you create ways for people to make money, but also get punished if things happen. So GameFi is a very, very natural progression of this. And the way I like to think about it is I like to think about it as mirroring the progression of the gaming industry in general. So like going back in time, like maybe the very first games were, shareware or a code that was in magazines, but like the early gaming was all about shrink wrap games. You went to Fry's, which is now defunct, much to my sadness. You went to Fry's, you bought a shrink wrap game. It was now, you paid $49.99 for it, whatever it was. You now own that game and you played it, and it was single player and all that kind of stuff. We then saw the movement into subscription based. I paid $14.99 a month. I got my subscription to World of Warcraft. That was sort of a different monetary mechanism, but I wasn't being nickel and dimed usually. Like World of Warcraft is very, very, notable in that I paid my subscription, but then I did have this incentive in there, right? I would go and I would farm, cabals or whatever it is, and I would get some gold out of that. And as I did that, I could then use that gold to buy nicer weapons. So there was this incentive structure built into it. But fundamentally, Blizzard built an incentive structure model that tried to remove monetary gain from incentives, right? They actually made it very difficult to sell the gold. They make it very difficult to sell weapons and things like that. In order to sell a weapon, you really have to meet up with whoever you're selling it to in world, which can be very difficult. And like the marketplaces are all kind of weird, and there's no way to get, there's no terms of service approved way to go from the in-game currency to the out-game currency. So it was a really market thing that it was looking at incentives, but it was still not to the point of what you're going to see in the GameFi world. Then you had sort of the games that were like sort of attention mining. So this is the Farmvilles of the world, which is, it's a free-to-play game. And the idea is that they are basically monetizing your attention. So it was really optimizing around how can you draw people into this game. And obviously there was ways to buy gold and stuff like that again, but it was the way I tend to think about these games is that they were monetized on attention. You basically paid in attention, and so you didn't pay dollars. You paid in your attention to a game, and then the various gaming companies monetize that by showing you ads, sometimes selling you products, whatever it was. But it's this idea of like you were trying to capture their attention and bring them in. And what you're seeing with GameFi, I always talk about the Farmville as sort of a classic, just revolutionary product, because GameFi is a very natural progression there. If you think about the progression from original gaming of shrink wrapped to subscription to free to play, GameFi is the next step in that linear evolution, which is not free to play. You are going to get paid to play it. So it's taking kind of the ideas started in World of Warcraft with this idea of, I'm gonna farm gold and turn this into something I can use. And it's gonna go to the next step and say like, hey, when you farm gold, you can go out and you can actually sell that on a DEX and make real world money from doing it. So as opposed to like Blizzard, who basically has done everything they possibly can to stop secondary markets around their products, their gold, their weapons, their armor, all of that kind of stuff. GameFi goes the exact opposite way and says like, hey, not only are we okay with secondary markets, it is a quintessential part of the game. And we are going to, instead of us monetizing your attention and only us reaping the rewards, it's almost like a credit card rewards program where like, we're still going to monetize your attention, whether it be through ads or like, there's different models for how this works. We're going to monetize your attention, but we're going to share some of that back with you. We're going to send you some tokens. We're going to allow you to keep some of the tokens that you're mining so that you're actually getting incentivized as part of it. There's a ton of different ways how all of this works. And part of the slides that we have here go into this, but there's a ton of different ways that different games work. Axie Infinity is one of the really popular ones. It's a fighting game of little monster blob things that are super fun. But there's a whole bunch of them out. Immutable X with Gods Unchained is a card game where you basically pay real money on chain for the cards. As you play more, you earn gold. As you earn gold, you can sell the gold or you can buy new cards with it. It's all tokenized. It's all super easy to use. And it's all about incentives. It's all about saying like, we are going to start rewarding our users with actual money that they can spend instead of it. Now, none of this is to bag on Blizzard. Like World of Warcraft's a spectacular game. And there's very real reasons that Blizzard did not want to have value attached to their items. And what's happened, what's great since when World of Warcraft happened is that the whole generation of crypto coming alive has basically meant that we've now figured out a lot of the nitty-gritty around why someone like Blizzard would not have wanted to monetize their stuff directly. Is it a security? Is it a digital asset? Do you have to 1099B or 1099 MISC the people who are buying them? All of that crypto has kind of, like, the digital assets the last like 3 or 4 years has kind of started to figure out. And so now is the perfect time for gaming companies like Zynga and Blizzard and all these guys to get back into it, because a lot of the hard questions have been answered. And now it's really this really ripe greenfield to start actually making money off of. And this is sort of what we're seeing. I mean, GameFi, I always call it GameFi. That's not correct. GameFi, TradFi, DeFi, GameFi is going nuts. I mean, these are the number of like actual games that have been launched that are monetized. Huge amounts of growth across the board here on what people are actually, who people are using, what they're spending on it. Real money. I mean, this is real trading volume across a lot of different things. I mean, look at $1.6 billion. I'm sorry, $28 million trading around Axie Infinity. That is real money. Like this is like no joke here. And there's real money flowing into this system, right? So OpenSea, as one of the major marketplaces for these NFT game things, has raised a bunch of money. Axie raised around. Everyone has raised money in this space. There's a ton of money has flowed into the GameFi space here recently. This is a spectacular thing, because I think that everything up to this point is very abstract. Like, what do you mean? Like, what? Like, I'm just gonna go and buy and sell stuff. Like, one of Gods Unchained is it's a Hearthstone. If you're familiar with Hearthstone, it's a Magic the Gathering. If you're familiar with Magic the Gathering, it's like poker, but with like custom cards. This is Gods Unchained is a Magic the Gathering variant that's all blockchain based. And so you play, you open packs in the same way. Like, you open a pack of cards and you get random cards in there. And sometimes you'll get really, really rare cards. That's what happened here, is that this, this got a really, really rare card and someone sold for 137 ETH. This is spectacular. Like, from a gaming company perspective, instead of being scared about what this will have wrought, this is basically saying, people want to basically, they want to sell their stuff. And one of the big business models that's coming through here, that's going to happen here, is essentially you as a gaming company can actually make money off of these, like, the games. It's one of the new business models here, is that when sales happen, you can get what's called a secondary royalty off of that. So you can actually get a secondary royalty. Like, whoever sold this, 13 ETH actually went back to the Gods Unchained people potentially in this marketplace. So that's a lot of money, and that's a great way to start monetizing, because you're not just monetizing the first time you sell the card, you're monetizing the second time, third time, fourth time the actual NFT is being sold. So, this is what we're going through here. Players can actually get incentivized for real world stuff with real world money, and that's just a game changer in the game world. There's real money to be made here. Every traditional video game company will have the chance to make new revenue streams. And that's what I assume when I think about a lot of people who are on this call, who maybe are at accounting companies at big gaming companies, or accounting groups at big gaming companies, or financial groups at big gaming companies. The thing that get you really excited is there's billions of dollars of revenue sitting out there for this. There is literally billions of dollars between, secondary sales revenue, licensing revenue, as you actually get across these marketplaces, issuing all these tokens. There's really, really, really cool new revenue streams that are coming up around here. But that, of course, gets us to the next part, which is that it is not super easy to do the accounting for this stuff. So here's where things get here's where we get into the nitty gritty of all this kind of stuff. So to start with, I like to always answer the question of, why is crypto accounting hard? I don't think it's obvious. You spend a day trying to do it, and it becomes very obvious very quickly. But if you're new to it, if your company is like, just about to get into crypto and you're starting to look at this is what's so hard. So let's say that I wanted to send everybody on this call today 1 Bitcoin for just being awesome people and coming to our webinar today. So I go to my wallet, I send you all 1 Bitcoin. At that point, I've picked up 3 different obligations for my company. I've picked up an accounting obligation. So I need to come in, I need to fair market value that Bitcoin, and then that needs to go into my marketing expenses. So, debit, digital assets, credit, marketing, like we are, I need to book I need to book my marketing expense for sending you guys all Bitcoin. That Bitcoin was also acquired at some cost. It is an asset treated as property. So I need to also calculate capital gains. So whatever I picked up, I've now picked up a accounting obligation to track my general ledger impact. And I picked up a tax obligation to figure out my capital gains from whatever I bought that Bitcoin at to whatever I just sent it to you at. And finally, because I'm sending it to all you fine folks, I need to give you guys all 1099 MISCs because I just sent you $40,000. So when you send someone $40,000, you need to do a 1099 MISC. You end up with this compliance obligation. And really, for everything to line up at the end of the year, you want to make sure that your revenue, your journal entries, your general ledger matches your tax books, matches your compliance books that actually go out for your compliance pieces. So this is what makes it so hard, is you really have to track, for every single crypto transaction, you have to track accounting impact, tax impact, and potentially compliance impact. And so this is going to impact, this obviously impacts the gaming industry here deeply, because no matter what it is you're doing, you are probably picking up some sort of things around this. You're probably picking up some sort of obligations around this. So let's look at a few of the really interesting ways that people are monetizing this stuff, because this is where the rubber hits the road. So one way that you would monetize a NFT-based blockchain game would be that you actually sell the NFTs. So this is a relatively traditional business model in some ways. Like, it would almost be like Magic the Gathering. You have a cost of goods sale, which is, for Magic the Gathering, that would be printing pieces of paper. For a gaming company, is probably your Ethereum fees, maybe some of your Photoshop, I don't know, things like that. You are essentially going to create a smart contract that costs gas to do. And then at some point, you open that smart contract up to all of your players. And they then go to that contract, they send that smart contract some Ethereum, and then that smart contract sends them back an NFT to their wallet. And I know that's kind of a crazy thing to think about, because it is kind of crazy. Like, there's no server. Everything I just talked through, there's not necessarily any server there. There's not necessarily anything in there that your software is doing per se. There's a smart contract that takes in Ethereum and sends out an NFT. That Ethereum then flows through into a wallet that you control. So essentially, you have just recognized one sale worth of Ethereum as revenue. And there's other things you can do there. You can take stable coins, you can take other crypto assets, things like that. You could take a credit card and issue the NFT directly. There's a lot of ways people do this, but the fundamental thing there is that you are basically taking a zero cost basis item. Like, it's more or less like selling a painting, right? You have a little bit of cost of goods that you're going to write off, but you are getting pure revenue for an item that you are then going to send out. And you need to recognize that. The thing that is really tricky about that is this doesn't happen once, right? This isn't like a one and done, like, oh, we sold an NFT, this is great. No. This happens thousands of times a minute, right? Thousands of times a minute, you get this kind of revenue coming in. One of the ways that I like to talk about crypto accounting in general is that it is one of the transaction volume will probably surprise you in some ways. We have customers that are doing 10 million transactions a year, and they're a one-year-old company. How many one-year-old consumer packaged good companies are doing 10 million revenue event transactions a year? So one of the issues that already comes into play is that, and this is one of the reasons, like, not to pitch Bitwave too much, maybe just a little bit, but this is one of the reasons you need tools like Bitwave, is that basically very, very, very quickly, you go from like one or two transactions, a dev playing around, my CTO bought some Ethereum, to like, oh, we just had 100,000 transactions in a week of revenue. What the heck do we do now? Super, super common, happens to like a lot of our customers across the board. So you not only need to figure out, okay, we need to track all the revenue that hits our wallets. We need to set a cost basis for all the Ethereum that is hitting our wallets. We then need to figure out what we're going to do. Are we going to hold on to it? Are we going to liquidate it? Like, what are we going to do on that side? Are we going to hold on to some and liquidate others? You need to be having treasury controls. Like, we've caught into customers where there's one dude that's holding a wallet that has $100 million on it. I mean, not even joking. So for your perspective, like, you need to think deeply about what it means to set up treasury controls around these wallets and things like that. I like to describe crypto as kind of the unholy alliance of tax, accounting, and treasury at a lot of our bigger customers. People are used to tax and accounting kind of being a little bit arm's length. They're then used to treasury being a little bit arm's length also. Like, these are all sort of different functions, the bigger the company gets. In the crypto world, they're all intimately connected. every accounting decision you make, when you make that accounting decision to say, this is like this was revenue and here's the cost basis, or this was an internal transfer that's non-taxable. Your accountants, your bookkeepers are making tax decisions every single day. So that's how Bitwave approaches this problem. Is we sort of take an approach that is a very bookkeeper first approach that is saying we're going to upskill your bookkeeper to be able to kind of handle some of this complex tax stuff. So now you've reached that point where you're getting millions of transactions of ETH a day. You have to figure out roll-up strategies. Like, am I going to recognize one revenue action a day? Am I going to recognize all million? Is my ERP going to handle that? If I suddenly start throwing a million transactions a month on my ERP, what the heck is it going to do? So you have to handle all of those kinds of pieces there, and then just sort of figure out all the stuff that goes around it. So the other pieces of this is, how do you want to track your taxes for all of this stuff? Because you suddenly end up in this situation, and getting a little bit into the accounting side, you end up in a situation where you have both assets that are, for accounting purposes, are treated as intangible assets. So you need to impair them potentially. And then you have, on the tax side, you have assets that you need to actually, that you need to track for tax cost basis purposes and things like that. So you end up getting into a lot of these really tricky things around all of this that you have to kind of consider. Last slide I'll show here before we get into it is, there's a lot of stuff that you as the finance group can do to make your life easier. A great analogy I've heard around this is an analogy that people use in other spaces too, which is you have like a paved road and you have a dirt road. A Ferrari can drive on a paved road, but it can't drive on a dirt road, and you're not getting that. So the idea is, like, you as a finance team want to create paved roads for for the different teams in your company that make it really easy for them to start recognizing revenue, using digital assets, doing all this kind of stuff without you as the finance team being a gatekeeper or being a burden on them. So if you can create a paved road that says, hey, a really, really easy thing for you to do is every different revenue stream that we're making, put it into a different wallet. Then we can write, and I say we as in Bitwave, but then we can then write rules that allow you to recognize that revenue very easily, and even book it into direct revenue events in your ERP. So you want to set up these processes, these paved roads to allow it. You want to be conscious about what exchanges you're working on. As you are adding exchanges, you are impacting your tax and accounting because the pricing strategy you will use partly can depend on what exchanges you actually trade on. So this is another super interesting thing, is how you're actually going to handle the exchanges and all of that. So we have 3 minutes left. This has been spectacular. I want to make sure we get to some questions because we've gotten some awesome questions in here. So the first question here is a great one, which is, would you be treating the NFTs like inventory? Yes, you treat the NFTs like inventory. There are 2 caveats to this. So first of all, it is an inventory just like any other coin inventory you might have, except it is a one-of-one coin token. So you're never relieving, you either have it or you don't. There's no intermediary selling and things like that. The other part that's complicated is that NFTs, depending on how you are collecting them, might be collectibles, right? So from a tax perspective, if something is a collectible, it gets a different tax bracket. So you may need to, depending on your clients or depending on you as a business, you may need to do a collectibles treatment for NFTs as opposed to a more traditional, just capital gains and losses on stocks, which is what the rest of crypto kind of looks like. So yes, it's an NFT, it's an inventory, but it's a one-of-one inventory, so it's a little bit easier to do. So next question, do you have any insight from your clients on how they account for acquisition of virtual land for use in producing revenue? Are they expensing or capitalizing the acquisition? That is a spectacular question. We have a couple of people that are doing this. I actually would have to go and check with them. That is a really, really good question. I assume that what they're doing is they're going to be capitalizing it for the most part. Again, this gets a little bit back to the intentions around this. So you are essentially buying this, but it is capitalizable. I mean, it is an asset that you own that has a value, even if you are creating revenue around it. So I tend to think that most people are actually more on the side of capitalizing that, holding on to it. I have yet to see anyone do an amortization schedule on digital assets. So I think with NFTs, we will see that. To be super honest, I actually think that there is a natural aging process that games go through. So I actually think with NFTs, we might see some sort of amortization schedules, or I'm sorry, depreciation schedules in this case. We might see a depreciation schedule for an NFT, which would then be, again, a capitalizing and then pick up a depreciation. I think that's probably the way people are doing it, that are our customers. I think you'd have a hard time, you have a hard time expensing it purely, mostly because you are then sitting on a really valuable asset. You mentioned Decentraland. Decentraland assets are worth a lot of money. So expensing it would sort of lead to very interesting issues there. Okay, next question. I own NFTs across multiple PDE games. It seems like a new business model that's a no-brainer for gaming companies. Completely agreed. Like, this is absolutely a no-brainer, because it's just like, it's like all of crypto in general has been this idea of like, it's captivated people, not just because it's magic internet money. It's captivated people because you can make money in different ways, and you could do it by, like, in this case, playing games. And this is all really fun stuff here. So anyways, okay. You try to retain users' attention. Yeah, there seems to be some backlash from game developers. Oh, this is such a great question. Developers in general. Any insight into why there's such strong opposing sentiment? This is such a good question. The only thing I can kind of offer here, to be super honest, is I don't think a lot of consumers, I think the loot box movement made a lot of consumers a little bit queasy about trusting new revenue models from gaming companies. And to me, it's insane, because NFTs are going to be an enormous value shift from, in terms of like an actual economic value shift from gaming companies to their players. An NFT ecosystem done right for someone like Blizzard would create a new class of working people, that is people who play like World of Warcraft to get games. And that kind of exists already, but like they work in kind of really bad conditions because it's all illegal. Like, this could be, real people who are, or like, this could be people who would otherwise have a white collar job that are, playing World of Warcraft. So I'm 100% with you. I think the backlash is, it's seen a lot of the scams in crypto in general, and seen a lot of like this idea of owning a JPEG and then not fully trusting sort of monetization strategies from gaming company. All those three came together with NFTs, and I think that's it. The best advice that I can give on this is, I don't think it's hard to change people's minds on this. I think if you come out and say, hey, by the way, we are going to have the ability for you guys all to, if Blizzard did this and said, hey, every item you have in World of Warcraft, you can go and sell and make USD on. And they're like, wait a minute, seriously? You're like, yeah, that's what NFTs are. I think that would totally change the world here. The next question here, we're going to go a little bit over. I apologize, but are there any regulatory issues? Hundreds of them. I mean, this is obviously why Blizzard didn't do this, because they wanted to have 13-year-olds playing World of Warcraft. But it is what it is. The direction these things are going to go is, I think you will have to figure out how to do the 1099s here. I don't think that's easy, but you are going to have to figure out how to do the 1099s here. And that potentially might mean not letting 13-year-olds play your game. I don't know how that all shakes out in the long run, but honestly, like the gaming, it's sort of one of those funny things. Like, as a gaming company, if you look at this and say like, oh my God, we have to do a 1099, it's a really tough position to be in if your competitor goes and says, yeah, we'll figure out the 1099 thing, and now we're going to start paying our customers to play our game. It's a really, really tough position to be in. There was one last question we'll get to here, which is, who manages transaction on the second NFT sale via the smart contract? So we didn't talk about it too much, but it's kind of all done through this platform, the ecosystem here. So what happens is someone like OpenSea actually contractually works with you to make sure that you are the owner getting the royalties back from it. Bitwave has a ton of tooling around this, tooling to help you recognize revenue, tooling to make sure that you're getting your royalties correctly. But it ends up being on the onus ends up being on the marketplace to basically pull that together and send it out. And Bitwave can help with tracking your revenue, tracking your receivables from that. We can help you with 1099s. Like, if you do end in the situation where you have to 1099 all of your customers, we have a full product for all of that. And that's it. So this is us. So thank you so much for all of your time today. This was an absolute pleasure. Last thing I'll mention here is, if you are going to be at Consensus in 2022, Bitwave is doing a summit, the Enterprise Digital Asset Summit. All are welcome. Please email us info@bitwave.io for a discount code. It's going to be, if you've enjoyed the content today, it will be very similar to that for the rest of this thing. Like, this is what we are essentially going to be doing here, is talking about what are the new business models, what are the new business implications, what are the tax and accounting rules that will affect it. We're doing the Enterprise Digital Asset Summit 2022. This is June 9th in Austin, Texas, right before Consensus. Please come. We'd love to have everybody here. All right. Have a great day, everybody.